Buzzing in trade though is Zydus Wellness, and was our company that we featured on Know Your Company as well today on the channel. Stock is about 6.5% up. This is on the back of Parag scooping up 7.27% stake sale from the True North Group. Is Parik betting big on the company behind Sugar Free and Complan? Why is it? What's the bull case? And of course, importantly, what's the bear case? Mahima is joining us for more.
Right, so it's certainly a very interesting day for Zydus Wellness today, and as you rightly mentioned, the stock is buzzing in trade today because Parikh has bought in around over 7% stake in the company. Now, in terms of how the bull versus bear case pans out for this counter, volume growth has been in double digits, which has not been the case for almost all the FMCG companies in FY25. This is because they have a significant amount of rural penetration, so smaller packs means higher volumes. In terms of bear case, the 3-year CAGR revenue growth has been at around 10%, EBITDA hardly at 3% and PAT at 4%. So the company has been growing, but not the growth has not been very surprising in terms of how 3 years have panned out. In terms of the next case, margins. Well, margins have been under pressure and have come down to that 14% mark, which were at around 17% mark in FY22. But the management has said that they will improve and come back to that 17 to 18% margins in the near future. That is a couple of years it will take, but it will come back to those margins. Next, in terms of cash flow from operations, well, overall, the operation from cash flow has been improving. It has gone to around 380 crores in FY25. But overall net cash flow position still remains a negative, so that could be a slight overhang on the company, which stands around negative 30 crore. The next one is return ratios, which are not very impressive. Both ROC and ROE stand at around 6% but valuations again, though 24 times to 2027 estimates as per Bloomberg is not very cheap, but still it's the best valuation amongst the entire FMCG pack and in the entire industry as well. So 24 times 2027 estimates for Zydus Wellness. Lastly, well, as I mentioned earlier as well, that Parikh has bought in around 7.2% stake in the company. But if we see the stock performance of the company so far, the stock has hardly gained 5% in the past 1 year and 53% hardly in the past 5 years. So we'll have to see as to how the stock now performs post Parikh entering in. Lastly, in terms of how analysts are viewing this company, well, right now, as per Bloomberg estimates, there are 5 buy calls on the counter, 1 hold, and the return potential suggested is roughly 16%. And lastly, just one point to mention here is also that the company has consistently maintained the dividend payout ratio as well. That is anywhere between 10 to 12%. So every year, company declares dividend anywhere between 5 to 6 rupees per share. So this is the overall view of how Zydus Wellness, of course, the bull versus bear case for Zydus Wellness, but we also had the management today on KYC show, listening to what he had to say about margin trajectory going ahead.
We want to get back to our 17-18% EBITDA margins over the next couple of years. There are 2 or 3 paths that we believe that will help us get there. First of them is that gross margin expansion. So we believe that between FY21 and FY23, largely led by a significant impact on various commodities, milk, oil, practically everything went up, and most of the FMCGs we saw gross margins came under pressure, and we were no exception to that. We've been able to consolidate and improve our gross margins, and there is still scope for building another 1 to 2% gross margins in next couple of years. Furthermore, if we continue to drive our growths ahead of our costs, I do see a scope for building an opportunity around operating leverage, which should help us improve our EBITDA margins and take it to closer to 18.
Well, thank you, Mahima, for that, and of course that perspective coming in from the management as well. Let's go across. Avinash, what's your take with regard to a Zydus Life?
No, I think, see, longer term, I think it's got a very good product portfolio, and I think clearly looking at the kind of numbers which they have presented till now, I think the markets would expect a better degree of earnings growth. Unless and until you get an earnings growth of at least 20-25% over the next 2 years, a multiple of say 27-28 times is not justified. So my sense is, Parag has obviously have made their own kind of view on the stock. But we would believe that, let the April to June quarter come in. I think we could get a better, decent amount of idea about the traction, both in terms of top line, in terms of profitability. And dividends are not the only reason one buys any stock. So I think one would like look at the earnings growth trajectory now, especially for 26 and 27. And thereafter, I think one could take a call. But structurally, we are positive, but not at the current price. We would prefer to buy the stock at lower levels.
So, Avinash.